Hey, welcome back. It's Jason Walter here. In today's housing market update, I have an update for you regarding mortgage loan forbearances. Plus, I'm also going to be sharing some news that home price growth continues to slow, yet housing inventory is increasing, which is good news for home buyers. And before that, please hit the like button. I greatly appreciate that. And also consider subscribing as well. I post frequent housing market updates so you can make a more informed decision about whether you should buy or sell a house right now. And if you want a real estate agent referral for virtually anywhere in the US, then go to homeandmoney.com/Jason. Okay, let's begin today's video, and let me first share a mortgage loan forbearance update. So the number of homeowners in forbearance dropped for the 18th consecutive week. The data analytics firm Black Knight reported last week that the number of people in forbearance dropped by 189,000 from 1 week ago, bringing down the population in forbearance below 2 million for the first time since early April of last year. Nearly 2/3 of the more than 325,000 plans reviewed for extension or removal over the prior week resulted in exits, meaning people ended their forbearance. That's the highest weekly exit rate in more than 6 months and the highest weekly removal volume since the first wave of plans went through their 12-month reviews a few months ago. All in all, forbearances are down 254,000 from the same time last month. In addition, fewer homeowners are entering into forbearance, which is a good sign. The number of planned starts hit a new low last week. The share of loans in forbearance dropped to 3.5%, which equates to 1.86 million homeowners in forbearance. That's down significantly from nearly 5 million in May of 2020. I'll be sure to keep you updated because another 400,000 plans are scheduled to be reviewed for extension or removal over the next 30 days. So the number in forbearance could decrease further very soon. The Mortgage Bankers Association, or the MBA, also posted their weekly forbearance update that I want to share with you. And I really like their updates because they share what homeowners do when they end their forbearance plans. Consistent with last week, only 7.5% of the homeowners who have ended their forbearances so far sold their houses or refied their mortgages. Only 1.5% resulted in repayment plans, short sales, deeds in lieu of foreclosures, or other reasons. The vast majority did a loan deferral or a partial claim, or just continued to pay their mortgage even though they were not obligated to do so. And by the way, a lot of people don't know this, but if you have a federally backed mortgage, you still can request an initial forbearance plan. That's for up to 12 months where you don't have to pay your mortgage payments. So homeowners with a VA, FHA, USDA loan have until September 30th of this year. And for those with a mortgage backed by Fannie Mae or Freddie Mac, there is no deadline set just yet. And here's a key point for you, because even if you do not have a federally backed mortgage, you still can contact your loan servicer, which is the company you pay your mortgage payments to see what options may be available to you. So your loan servicer does not have to agree to it, but I personally know homeowners who have entered into a forbearance plan even though they did not have a federally backed mortgage. Plus, the Consumer Financial Protection Bureau and other regulators have encouraged financial institutions to work with borrowers who are still experiencing a financial hardship in order to mitigate the risk of foreclosures. Okay, changing gears slightly, I want to share the latest update from Realtor.com for the week ending July 3rd, because they state that home price growth has been slowing. They reported that home prices grew by 10.1% compared to a year ago, but the rate is slowing, and we also may see single-digit price growth as early as next week. In the meantime, the median asking price hit a 5th consecutive high to $385,000. Unlike 2020, during a normal real estate market, home prices tend to cool off during the summer months as a lot of people go on vacation and put their home buying plans on hold. Realtor.com is expecting a more normal second half of the year, with home prices easing up after this summer's highs. This could create opportunities later this year for home buyers, especially if more houses get listed for sale and rates stay close to 3%. And speaking of housing inventory, new listings in the US decreased by 3% ahead of the July 4th holiday weekend. This is 100% normal because a lot of sellers decide to list their houses after the holiday weekend. I noticed this too in my market, which is the greater Sacramento area, because we had barely any options right before the holiday weekend, and then just after the 4th, we had a ton of listings that hit the market. Realtor.com went on to say the following: we're seeing more new listings this year versus last year in 12 out of the last 15 weeks. The influx of new sellers over the last few months has contributed to slowing price growth and smaller inventory declines. In addition, total housing inventory is down 39% when you compare it to 1 year ago, and that's a lot better than 50% that I've been reporting earlier this year. So the rate of decline of active listing inventory is slowing, which is good news for homebuyers. This is also the 13th straight week of smaller year-over-year declines of housing inventory. Now, don't get me wrong, this does not mean we're in a buyer's market, not even close, but it's certainly helping to slow down this red-hot housing market. And changing gears slightly to give you a mortgage interest rate update, rates are still hovering around 3% for a 30-year fixed-rate mortgage. In other news, lumber prices are down over 30% over the last month. The current lumber futures price is around $600, which is a huge improvement of the record highs of almost $1,700 from 2 months ago. In addition, the yield on the 10-year US Treasury note is near a 5-month low. I mention this because the yield on the 10-year US Treasury note is tied loosely to mortgage interest rates, so when the yield decreases, so could mortgage rates. And ever since April of this year, mortgage interest rates have more or less been falling. Despite the dip of mortgage interest rates, for the week ending July 2nd, the number of mortgage applications for home purchases has been falling, reaching its lowest level since the beginning of 2020. However, as they reported last week, pending home sales in the US increased by 8% in May, according to the National Association of Realtors. I'll have a big update for you in a couple of weeks when they release June's pending home sale numbers. Also, I would love to hear from you. What are you seeing in your local housing market? Every market's different, right? Of course, I'm in the greater Sacramento area, and I'm personally seeing sellers gain multiple offers, but not as many as earlier this year. According to Ryan Lundquist of SacramentoAppraisalBlog.com, about 70% of the sales in the greater Sacramento area are getting multiple offers, and most houses are selling for over the seller's asking price. I'm personally seeing more listings hitting the market, which is great news for home buyers who need more options for houses for sale. However, the competition for those houses still remains very, very strong. Out of the last offers I've written over the past few weeks, we've been up against 5 to 10 other offers. I personally would love to see more housing inventory to hit the market, to give our home buyers more options for sale, and to decrease the competition for the houses that are for sale. So please comment below with what you're seeing in your neck of the woods. So check out the link below if you want an agent referral, and also if you did enjoy watching this video, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that, and also consider subscribing as well. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and look forward to seeing you on the next video.